Should we expect stablecoins to be even bigger than Bitcoin collectively, or how do you think about it?
So the strange thing is everyone I know right now wants to launch a stablecoin. So even TradFi or DeFi, right, does not matter. I think it depends. Like if that is successful, then all other yield instruments, regulated yield instruments will come, because once your money is on chain, right? What you will do with that? You need to build credit instruments for that.
What's going on, guys? Today we've got an excellent episode with Tarun Gupta. He is the founder and CEO of CoinShift. They have created a new type of yield-bearing stablecoin that I think you're going to be interested in hearing about. In this conversation, we talk about what's going on with stablecoins, how big can they get, why are so many people trying to launch these stablecoins, what the profound impact of people actually holding yield-bearing stablecoins could be all around the world to 8+ billion people. And of course, Tarun explains what they're doing, how they're doing it, what the risks are, and how they're trying to mitigate those risks. So I hope you enjoyed today's conversation with Tarun Gupta. Tarun, I thought a great place to start this conversation is, when I got into Bitcoin, I saw Bitcoin as a medium of exchange. It was a store of value, and eventually everything's going to be priced in Bitcoin, and you're going to get this hyper Bitcoinization. And one of the things that maybe I've changed my mind on is, at least in the short to medium term, Bitcoin really has dominated what I would call the global store of value use case, right? That is the thing that people are understanding. They buy it, they hold it, never sell your Bitcoin. It's going to be worth more in the future. And it's done a fantastic job of not only protecting your purchasing power, but actually increasing that purchasing power over time. What has changed, and what the new information was that really changed my mind, is that there has been the rise of stable coins for that medium of exchange use case. And so you all recently created this stable coin, and I think you got a lot of thoughts on it, but maybe we could start with this idea that, like, Bitcoin has got the store of value. Stable coins seem to be becoming more of like that banking infrastructure. How do you look at stable coins' role and like what's happening here?
Yeah, for sure. So the way we see this is, like, for the last 10 years, right? As you said, Bitcoin has been like pretty successful as a store of value. And that's why everyone thinks it as replacement or an alternative to gold reserves, right? But at the same time, what we have seen is, like, the world has changed into an internet economy, and the e-money, which we call it, like the banking e-money, is being like used by everyone very easily, right? And then the emergence of neobanks, for example, like Revolut, Brex, or Mercury, has really decreased the barrier and democratized the access to financial services across the world, right? With just internet money. And after this, Bitcoin blockchain innovation, what we have seen is, like, because of Ethereum blockchain, you can really program the other use cases, right? And this make the emergence of these like two major stable coins, like USDC and USDT, became like the 95% of the stablecoin market today, which is at $200 billion, right? So think of, like, let's define, like, what does a stablecoin even mean, right? So basically, essentially, it's like a dollar putting on a blockchain, right? So what Circle has been trying to do in the last 10 years is, like, can you just bring dollars on the blockchain? Very simple use case, and it becomes like a simple money use case. And then it merits the properties of blockchain. What is the property of a blockchain? Is just this distributed ledger, right? So what the entire TradFi today is working on this problem statement of reconciliation and settlement, right? Why your money moves slow, if you think what the architecture of money is just dependent on this reconciliation and settlement layers. And the more you have basically the amount of money, the more risk you are taking while reconciling, right? And this specific property is, if you dedicate to a decentralized ledger like Ethereum, then you solve this risk layer, right? And if you have this risk layer solved, then you can move money irrespective of the amount at the speed of almost blockchain, right? So this is like a fundamental disruption, and that's why USDC has been growing. It's almost like 60 billion right now, and USDT is like almost more than $100 billion, right? That proves the use case. But what these stable coins are doing under the hood is basically they are just keeping these reserves. For example, in case of USDC, they're keeping majority of the reserves in overnight treasuries or in other government bonds, or there's like a reserve requirements, you can say, right? And their entire promise is, when you hold USDC, they will give you $1 when you want to redeem it. And that has been their promise for a very, very long time. And because the regulations have not been like super sorted for a very long time. Obviously you need to trust their auditor reports and everything. But yeah, I think this has been like the true use case so far. And now we are seeing basically, because these stablecoin issuers are making money from their reserves, right? And they're not sort of easily can distribute the yield. For example, in US, you cannot just distribute the yield generated from cash equivalents like overnight treasuries. It is not legal right now. It is not regulated. And that's why we have seen the emergence of other stablecoins, which is like yield bearing stablecoins, where users want to get the yield from the underlying asset. And we can talk more on that. But yeah, just to summarize, as like the use case is very simple, is money. A lot of people have seen they are generating a lot of yield under the hood. They want to take a portion of that yield, right? And there is a lot of demand of that yield bearing stablecoin. And that's why the last 5 years, if we see like there is a huge competition to these two stablecoins. Still, they have been like the strongest, but there are like 100 plus stablecoins exist. And out of that, there are emergence of stablecoins like Ethena, which is at 6 billion right now, and Sky, which is like MakerDAO, almost at $8 billion right now. So they are also growing, and we can touch more on that. But yeah, I think these are like the distinctions, and that's why it is working.
So you all are building like a yield-based kind of value proposition for folks. And one of the things that I always think about is in the United States of America, we're spoiled. We get yield, right? You go, you put your money in the bank holds on to it for you. They'll give it back to you when you want it. You don't worry about them taking it from you. They'll pay you some yield, although in certain accounts it's very low, in other accounts it may be a little bit higher. But this concept of compounding and yield generation, all this kind of stuff exists. If you go in many places around the world, let alone putting your money in the bank and them giving it back to you, that actually may not happen, right? There's not kind of that strong of a clear rule of law. But this concept of yield can be life-changing. If you now can save money in a asset like dollars that are better than your local currency, and you can then go ahead and get yield, that feels like it's pretty profound. And so talk a little bit as to how these yield-bearing stablecoins are working. Are people getting more stablecoins, or is it just like increasing the value, more like a stock buyback type situation? Like walk me through exactly how this works and how you guys have built it.
No, this is a beautiful question. So think of, right, once you as an institution or a business, you just start keeping these stable coins, right, on chain. So you are on chain right now, right? And once you hold this, like what you can do after that, right? And at the same time, the underlying stablecoin issuer is generating a lot of yield, which is not being passed to you. So the next thing comes once you have these stable coins on chain, the next thing comes is credit. Right? Everyone wants to generate some kind of yield on top of it. And that's why the emergence of lending protocols in Ethereum just became like so popular, like Aave, Morpho, and there are like a couple of other lending protocols. So users are sort of generating an additional yield through these stable coins by putting into a lending pool. And from there, the BTC, the Bitcoin holders or Ethereum holders can come, they borrow these stable coins, and the end user gets like an IOU similar to bank. It's like a USDC in case of Morpho, sorry, in case of Aave, it's like an Aave token. And a USDC is representing your USDC that is lent out to Ethereum, Bitcoin, and other collateral holders. And that borrow yield is a real yield because there is a real demand for USDC in the borrow side. You generate this additional yield, very similar to your bank, basically, right? So there is a huge a combination of these regulated sort of stable coins with the lending markets. And that's how the end user is able to sort of generate a lot of yield. And then this was like the similar concept, if you know, MakerDAO it just does not dependent on in the initial days, it was not dependent on any regulated entity or stablecoin issuers. So what they did is just come up with your Bitcoin, and you will be able to come up with your Ethereum, and then now BTC as well. You will be able to mint the DAI directly, and the BTC holder is just borrowing the DAI, right? So any DAI is in circulation is backed by over collateralized Bitcoin or Ethereum, right? So this is another way to actually create a stable coin. But what is interesting about this, the generation of yield is the borrowing fees, right? So what they did is they introduced this saving rate module around 2020. And what you can do is you deposit your DAI, it's like a saving account, you put it into a S DAI, which is saving DAI, and you get this borrowing fees as a yield. So think about a risk profile now. I'm a Bitcoin holder, I mint DAI, right? And DAI is pegged to $1, just on the ticker side, and then you put this DAI into SDAI, and then you start generating yield on your Bitcoin in a sense, right? So it's a very interesting way to really launch these stable coins, which can pass on the yield to the direct user. So the method we have seen last 5 years is just this additional staking layer. So you have this money layer, and then you stake it somewhere to the lending protocol or saving rate module, and then you pass on the yield, right? And then I think last 3 years, what we have seen on the yield use case is having this delta neutral strategy. All hedge funds are generally delta neutral, right? So let's say you have $10,000 worth of ETH. You're already longing this position as a collateral. You can go to perps exchanges like Binance and all. You can put like a 1:1 delta neutral position on the short side. So this delta neutral position, Athena like player has tokenized that and brought it into DeFi. And they are calling it like a stable coin. We call it like a pseudo stable coins in CoinShift, but end of the day, it's representing a delta neutral position, right? And the more the market is doing the long, basically, the more yield you can generate, right, from the underlying collateral, and that has been passed to the end user. So these yield are, just to summarize, there are two sources of yield so far. One is the lending side. I'm talking like a real source, not like these tokens and all. Real source is lending. The second is delta neutral position. Both has very different risk profile, right? On the lending side, you are trusting the protocol you are using. You are trusting their risk managers, if they're allocating the right collateral or not, right? Or on the delta neutral side, you are trusting that issuer who's dealing with the custodians to have your collateral and dealing with the centralized exchanges, right? So I think these are the two ways, and it is getting pretty hot these days, like in terms of generating these huge yields. And we have seen for up to 30% of yield on USDC because of these two reasons, like lending protocols and margin trading, basically.
When you see very large yields, right, over 10%, 20%, whatever, obviously there has to be some risk that's associated with it. And how do you think about what those risks are and then what you or others are doing to mitigate those risks? Today's episode is brought to you by Franzi. If you're a dreamer, a go-getter, or someone looking to own a business, you better listen up. Franzi is the ultimate platform to make franchise ownership accessible and achievable for everyone, from corporate escapees to side hustle seekers and investors. Franzi does more than just list franchises. It's equipped with the Franzi Fit Score, an AI-powered matching tool that finds the best brands for you based on your financials, your experience, your risk tolerance, and your goals. You can also get pre-qualified to see exactly what you can afford, check brand availability in your area, and discover the hottest new concepts hitting the market. And if you need guidance, Franzi's team of expert coaches are there to help you navigate the world of franchising and find the right opportunities for you. So whether you're just starting or you're looking to expand, Franzi's got everything you need. Head over to franzi.com/pomp today and start your journey to business ownership. Again, that's franzi.com/pomp to start your journey to business ownership. Today's episode is brought to you by Zappo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Zappo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Zappo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Zappo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Zappo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to zappobank.com/pomp to learn more. That's XAPOBANK.com/pomp. Go check them out at zappobank.com/pomp today. When you see very large yields, right, over 10%, 20%, whatever, obviously there has to be some risk that's associated with it. And how do you think about what those risks are and then what you or others are doing to mitigate those risks?
Yeah. So honestly,